So the question is, do you have it in you to admit when you're wrong? Can you admit when you're wrong? Because you need that skill set in this industry. A lot of the hotheads, and I might sound like a hothead, I'm just passionate. But the hotheads that will tell you, don't do this, don't listen to me, don't listen to anybody but them because they have a service. They have something to sell you. I'm not doing any of that. I'm over here outperforming them, over delivering. I'm busier than them, proving it, showing you. Got profitable students coming out, and they got something to say about why you shouldn't be here. And the response would be, buy their stuff as an alternative. I'm just reminding you, I'm doing this because I want to do this. It's free. It works. People are making money. You can find consistency in it. You will lose money like anything else, but you need to understand how to manage even winning positions. Winning trades, they have to be managed just as much as a trade that might be a losing trade, but you hold on to them too long. Now, think about this for a moment. If you've traded with live money, this is not the same as when you're trading with a demo or paper trading, you're trying to learn how to do it. If you ever traded with live funds, you're going to have this experience. Once you do it, at least a few times, you'll have this happen to you. You'll put a trade on. You'll feel good about it, or maybe you won't feel good about it. You'll just be impulsive and put the trade on because you have time and you just want to see something happen and feel like the lottery wins. But you'll put the trade on and it won't move in your favor right away. And it starts drifting down. And you know in your mind's eye that if it goes to this level, you don't want to be in that trade. But your stop loss, if you've adopted one, is maybe very close to that level that's really uncomfortable for you if you get to that point. So in reality, that should have been your stop loss where you're uncomfortable, because you don't know if the market's going to drop down there and snap into that level and go through it. So wherever that pain threshold is for you in the trade, that's where your stop loss is. But how do you manage that? Fear. Don't over leverage, but use that same stop. Because what you're doing is you're saying, I'm fundamentally wrong as a human being, because if it goes here, it's probably going to keep going. And my idea about it going higher is incorrect. And that's uncomfortable. That's worse than a stop out, because it's pride. Pride takes more than a losing trade takes in funds. It lasts longer. The pain's worse. The drawdown doesn't come back that fast from a losing series of trades because of the ego. The pride is the issue of being right, to be perceived by your peers or onlookers, detractors, supporters, whatever you want to call it, an audience, whoever you invite to watch your trade, to make it harder than it fucking has to be. It's stupid. It's madness to see what you guys want to do with yourselves. And then when you are struggling, trying to find profitability, you're coming at me to vent when you're doing it all wrong. You're out there trying to arm wrestle yourself in front of the public and you're floundering. I don't need to do anything. You're doing it to yourselves. But if you're here to be a student and you want to learn how to do it correctly, you have to identify where you're wrong and admit that, okay, I'm wrong here. That's wisdom. That's wisdom. But you look at it as, that's a weakness. I should have known better. Who says? Who says that you should have known better? You don't know what that market's going to do. You don't know if it's going to run to your target. I don't know. That's why I have to use a stop loss. If I knew for certain, I wouldn't even bother moving my stop loss. I wouldn't use a stop loss, and I wouldn't take my partials, would I? Oh, shit. I never really thought about that. Hello. In high resistance liquidity run signatures, I am very, very disciplined about taking partials. If I'm in a low resistance liquidity run signature, I can run them for a full pool. I have a lot of things that I feel confident, and I'll let the full stop out happen in that case and not have to worry about getting any partial. I know I'm on side. That doesn't mean I know with 100% assurity that I'm correct. It just means that I, as the trade manager, managing the person, the risk, the emotions, the money, all those factors being equal, I'm comfortable with not taking partials in a move that's low resistance liquidity. It means it's going to move like a hot knife through butter. But it's a lot more aggravating when you're used to seeing moves just run right away for you. See, I'm used to trading in market environments that, like when I dog whistle for my boxers and I call them, they immediately come to my side. When I dog whistle a trade that's a low resistance liquidity run signature, I'm comfortable knowing that the market's going to go where I want it to go. I still have a stop loss. I'm not all that pressed to take partials or that much of them off because I'm generally on the right side. But high resistance liquidity run signatures, you have to be mindful that they can many times come back and swipe stop losses much more frequently than a low resistance liquidity run signature. Those price runs, they don't have a whole lot of returns back for stops. They're quickly trying to run to an objective above or below the marketplace, which is the reason why I teach my students to look for those. They're very rewarding. They are quick to give you that instant gratification, and it's exhilarating. You feel like, wow, man, that thing delivered like nobody's business. Man, how fast that thing happened. That felt awesome. And you want to go right back in and do it again when you're new. You think it's going to be something just like that next. And it's not like that. There's small little surgical precision elements that leads to that. But high resistance liquidity runs, they will still go, but they go in these stair-stepping type thing. It'll go up a little bit, consolidate, drop down, reaccumulate, go up a little bit slowly, go to a new high, consolidate, drop down, run stops. Consolidate, rally up again, consolidate, drop down to an inefficiency, rally again a little bit, and then go down once more to take out stops after the inefficiency formed. That's what makes a high resistance liquidity run very frustrating. And many of you that are trying to learn my content, you're going to think that you're trading like I am. And you might think that you're in one of those trades that move real quick and it's like hot knife through butter. But in reality, you're trading a high resistance liquidity run, expecting low resistance in that move. And you're getting frustrated. Why? Because you don't know what you're doing. 2, you're over leveraged. 3, you don't have experience sitting in a trade. And you're not going to take anything off because you listen to people on social media say, don't take partials, they're stupid. When I'm showing you every day, every week, months and years, over and over and over again, me executing with the very things that I teach. Come on now. Come on. What matters more? If you're in a court, okay, if you're sitting in front of a judge and a jury, who's going to have the more damning evidence? Somebody that's bringing the receipts showing that this is what it works like, this is execution, this is the person driving, and I'm doing it. I'm doing it every fucking day. Every week, I'm showing you exactly what I taught in those videos, and it's happening like precision. But it's also delivering the same way when I say it's a high resistance liquidity run. It's performing exactly how I said this is what you don't want to be pushing hard in these types of moves. Can you make money? Yes. Can you find 5 handles in those types of moves? Yes. But you have to relax. You have to relax. And you can't push. And you sure as hell need to know the bias. You can't be selling short on a day like this over and over and over again, and adding more and trying to do a bigger position because you're arm wrestling for clout and failing. When I'd be in trades, usually it was the bond market, because when it would move, it would move nice and quick. And every tick was over $30, $31.25. So just a tick is almost what a full mini in E-mini S&P is today with one contract. And this bond market would move around a lot. And if you got 16 ticks, you know, you're making what 10 contracts on a mini move of one contract would deliver, or lose that per contract. So I'd be in the trade, I put the trade on, it's not moving for me. I got 11 ticks. I could bank something here, but I'm like, no, I need it to go 16 ticks. That's what I wanted my trade to be. I took this trade, and I am not going to be able to move the stop loss because I was too new. I didn't know what I was doing. So I kept the stop loss exactly where it was because I was thinking, I don't want to be wrong. I don't want to get stopped out and not get my $500. What's wrong there? Number one, I'm assuming I'm right, and that's always a bad thing. Two, I'm not appreciating the fact that the stop loss is there to protect me, not a institute of pain and suffering. It's to protect you from excessive pain and suffering. That's what it's paid to do. When you put that stop loss in there and you pay the transaction costs and commissions and fees for that executed order, you paid it to do its job, which is to what? Keep the amount of money and suffering at a minimum. Whatever that order would execute at, that's what you pay it to do. Once you place the order, you don't worry about that. It's doing its job. If you are going to worry about it, then don't use the stop loss and try to time it if it goes down there, because that's the equivalent of what you're doing. So why waste any fucking time doing that? Put the trade in there and then focus on what matters most. Is the trade continuously giving you signs and signatures in price action that it's going where you want it to go? It's not giving you the broken wing tactic. It's running out of steam. It doesn't have energy anymore. You've been in trades where you just know that this damn thing is not going where you want it to go. But what happens? What happens? You don't take anything off. You don't close the trade and say, okay, I'm not going to waste any more emotional and psychological equity on this trade. If you're holding on to something and it's just driving you nuts, your infancy in this, or your obsessiveness, which I know a whole lot about, will prevent you from closing the trade and walking away. And knowing, here's the common sense that everybody ignores. The market's going to trade next week. It's going to have a morning session. It's going to have a PM session. It's going to have liquidity runs. It's going to have a run to inefficiencies. It's going to be all kinds of repeating things that you somehow get amnesia about. And you let the trade go into drawdown. You move your stop or take it off. Instead of taking something off when you had profit and easing that pain and growing through that pain like a child in growing pains. When I was a child, I had growing pains with my feet and my ankles and my shins. And I'm not that tall. I'm only 5'10", but you would have thought with the amount of pain I was feeling, I was going to be 6'10". I thought I was being stretched out like some medieval device. But that growing pain of going through this, you compensate for that pain by taking some of the trade off and fund yourself. Take it off. Reduce the measure of risk that you're going to hold on to. And be diligent about making sure that if you start feeling that, don't let it go to your full stop. Don't let it go to your full stop. Simple. If you open the trade up and you're going to take a mistake of 2 full percent, as soon as you start squirming, take the trade offs that way. Whatever you have, it can't take more than 1% away from you. And if you've taken something off in partials, it can't even be a full 1% then. So what happens when you're wrong? Yeah, it was a mosquito bite. It's not pleasant. It's going to itch you over the weekend. You're going to think about, oh, it didn't work out for me. You're going to keep going back to it, scratching it and scratching it. If you keep doing it, it's going to get infected. And it's going to hold you up from doing something new and exciting and more profitable. But you have to let go of these things and identify these times where you're getting uncomfortable. You're vocalizing your frustrations. You're breathing. It shows that you're physically uncomfortable. You're agitated. You're fidgeting. I fidget with a deck of cards every time I'm trading. You can't hear it, but I have a deck of cards. I'm either doing shuffling, I'm doing one-handed cuts, I'm riffling through them. I'm doing that while I'm waiting for the setup to come. Because in my mind, I'm that sports car in neutral, the gas pedal to the floor. I'm ready to go. Just look at me. Look how many times I can get into something. Boom, 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 shotgun blast. I'm buying everything or selling everything that could have been used for entry. I could do a whole lot more entries, but I don't want to be too much for all of you. I might show something like that later on in September, October. But you don't grow if you hold on to the trade and take nothing off and remove the stop or move the stop larger. When you start trading with real money, you're going to discover something about yourself. This is the thing that hurts most people. It's usually the men. You're going to put the trade on. It's going to offer a little bit of profit. And then you're going to feel that struggling. It ain't moving. It's not moving for you. And you start worrying about what? It's going to go for my stop. You're worrying about it going to your stop instead of saying, is it showing signs that it wants to continuously moving in my favor? But no, you're not doing that. You're focusing on it's moving to my stop. You're telling yourself it's going to your stop. You're thinking it's going to your stop. But you're not doing shit about taking any of the risk off. You've abandoned the idea of studying whether or not it's giving you clues that it's going to keep moving in your direction. You totally forgot about that. Now you're arm wrestling the market like you're somehow going to be able to control it with telekinesis. You staring at the chart, you cussing at the chart, you throwing shit at you're throwing shit all around the room. You think that that's going to have something to do with how the market's going to say, oh shit, he just threw his glasses. Oh shit, he just threw his Ray-Ban glasses against the wall. Man, I better not go for this guy's stop. You think that's what's going on? You think that's what's going on? You think that anything you act out and go crazy, that's going to have an influence on what the market's going to do. Now, clearly, right now, we're talking outside the marketplace, and you're laughing. You're probably thinking to yourself, it's true. I've been there. Maybe not throwing your Ray-Bans, but you've done something to that effect. Resisting the obvious. What you should have done is take something off or collapse the trade and just be out of the pain. You don't want to stay in those positions of uncertainty, pain, discomfort, because what you're doing is fortifying the exact reasons why you're going to be scared shitless taking the next trades when they're good. Oh man, the last time I got a girlfriend, she cheated on me, so I'm not getting a girlfriend. What the hell kind of logic is that? That's what you're doing with the market. You had one bad relationship that you held on to a toxic relationship. The trade doesn't love you. It's okay. There's other ones out there that will. So you have to do what? Kill it. Not murder, but you have to kill the transaction. Just be done with it. And save your mental equity, your emotional equity, that psychological tug of war. You have to know when that's there. And as soon as you feel, and I felt it today in the market, it was not giving me what I wanted to see. And I was communicating in my text in the annotation so that it needs to go here. It needs to go right now. And it just started fluttering. It's okay. I got 5 contracts on. Let me take one of them off. Do I feel any less anxiety about whether or not this is going to pan out? Not that I was freaking out, but I'm communicating the way you're going to feel it. When you have real money, whether it be your funded account, trading a demo account, because that's what they all are, or with your own money, you're going to feel this eventually. And the way you manage it, the way you press through it, is you take something off. You reduce the risk, and if there's profits, you bank some of it. And you do it again if it doesn't feel like you've overcome it. And that's what I did. I did it once, twice, 3 times. I said, okay, I'm just going to take it down. We'll take one contract and see if it can run to my target. I don't care at this point. And then being stopped out, $9,187. Wrong. I did the right thing. No regrets. That's why I typed it out. I was communicating exactly how I teach you all. I did not get what I wanted in the final piece, but I anchored with a bullet point so my subconscious remembers I did everything right. No regrets. I got stopped out with no regrets. I do this. I live this. And I teach it so that way you do the same things. You can never get to this level of precision in trade management unless you do the thing I'm teaching you to do. And that's just the bottom line. It's just the way it is, and I don't give a shit who tells you otherwise. I want to see somebody else do what I'm doing. Do that consistently. Explain it and the logic behind why you're going to fail, why you're going to struggle, how to beat it, how to go through it. Not, well, yeah, don't use a stop loss because you might get stopped out. No, use a stop loss because you're going to get stopped out. And you want to keep the risk limited. And you're going to find out one of these days when you finally do touch an account that has real risk monetarily, you're going to have all kinds of staying power. You're going to have Viagra effect, holding on to a fucking losing trade. You will go all night, all week, all friggin' month holding that losing trade. But your winning trade, you got 2.5 handles. You're freaking out. You can't hold it. You got to go. That's it. Party's over. Date's a dud. Think about that. You are willing. You're willing to go to hell and back for that losing trade. That son of a bitch ain't paid you one dime. It ain't gave you anything. It ain't not even so much as a reach around. And you're not going to let go of that one. That's the one, baby. You're going to win. This is a fight to the death. It's mortal fucking combat on this one trade. It's a losing trade. You know damn well it's not going to come back. You don't have a stop loss on it. You're going to hold on and hold on and hold on. And here's the worst case scenario. Some of you are adding to it because you think, all I got to do is add more and just a little bit of movement in my favor. I don't need to go all the way back to my original entry because I keep buying more and martingale your ass out the door.